Coming right up, we have the exciting Fintech Demo Day with topics centered around Fintech, funding, and the future. Moderating this session is Ajay from Startup Réseau and our 8 accomplished panelists from accelerators, venture funds, and startups. Enjoy this engaging exchange.
Hi everyone, a very warm welcome. Good afternoon if you're in Singapore, India, or this part of the world. Good morning, late night, wherever else you are. Interesting topic that we have scheduled for the next 60 minutes, talking of Fintech. Obviously, we are at Singapore Fintech Festival, so Fintech is at the core of it. Fintech, funding, and the future. And we have an interesting set of panelists. 3 of them, they cover the funding side of things. And because we're talking future, we have 5 really interesting startups that are going to be presenting the second half of this next 60 interesting minutes. I have with me Maelis Carraro from BFA Global Catalyst Fund, Ganesh Rengaswamy from Quona Capital, and Melissa Frakman from EMVC. So 3 of them wearing an investor's hat, sharing the perspective on fintech and the fintech funding side of things. And this will be followed by the pitch session that I spoke about. And we have with us BankBuddy, Discover Dollar, SAWOLabs, PesaKit, and Perfios, 5 very interesting startups that I'm sure you all will look up to in terms of the future aspect of fintech ecosystem. So let's kickstart with the panel first. So esteemed panelists, welcome, Ganesh, Maelis, and Melissa. If you can just quickly go around the screen, not the table, talking about what each one of us does. If we can start with Maelis, going on to Ganesh, and then Melissa, that would be awesome. So Maelis, over to you.
Sure. Thanks, Ajay. Great to be with you all. I'm Maelis. I'm the Managing Director of the Catalyst Fund, which is an early stage global tech accelerator for fintech companies across emerging markets and a philanthropic fund. So I've been working in founding really this program for the past 5 years, and we've worked with over 37 companies globally to date.
Ganesh.
Hey, hi everyone. Good to be here. Thanks for the intro, Ajay. I'm Ganesh Rengaswamy. I'm co-founder and managing partner of Quona Capital, which is a global emerging markets focused fintech fund. We invest across Asia, Africa, and Latin America, and primarily focus on early stage investments from pre-Series A up to Series B.
Melissa.
Thanks, Ajay. It's a pleasure to be here at Singapore Fintech Festival. I'm Melissa Frakman, founder and managing partner of Emphasis Ventures, EMVC. We're a very early stage, sort of angel pre-seed to Series A fund focused exclusively on fintech and very much focused on technology that is built in for the rest of the world from India. So we look at India in the context of other emerging markets. We have a portfolio of over 16 companies and then work with the larger ecosystem in India as well, connecting them with the rest of the world.
Great. Thanks, all 3 of you, for the wonderful introduction to the work that you do. What I've done is I've quickly gone through the website of each one of yours, and I've picked some keywords, and I wanted to elaborate a little bit on that. So coming to Maelis, having a look at Catalyst Fund, one of the words or a bunch of words that kind of really stood out for me was or is a data-driven world. So if you can just elaborate a little bit on that and how, when you're talking of a thesis which kind of revolves around inclusive technology innovations in emerging markets, how and where kind of data fits in, and if you can just elaborate that a little bit more, that would be interesting.
Sure, absolutely. And I'll actually explain it both in terms of our investment pieces, but also in terms of how we support our companies, because our model is quite different from other funds and accelerators. So when it comes to financial inclusion, obviously the role of data is paramount in expanding the array of possibilities when it comes to creating financial products for underserved populations. I mean, this is no news for anybody that is probably listening in the room. And so with that in mind, we have backed a lot of companies that are looking at alternative data sources, for example, to provide alternative credit scoring or digital credit to small businesses across markets, especially in the African continent. And we've also looked at how other sources of data can be used in other product verticals, whether it's investments or savings or insurance, and when it comes to innovating really for the underserved low-income customer. So I'll say, and there's a lot happening obviously in the space. We've also, when we think about data, obviously looked a lot at investing companies that we're using actually advanced technology and advanced data models. So for example, artificial intelligence backed systems, and we've had a couple of those in our portfolio as well. And then on the flip side, when we have companies that join the Catalyst Fund program, the first thing we tell them is data, data, data. Like, you have to focus on really extracting the data from your product, from your interactions with your customers, and always focus beyond vanity metrics on what data is telling you. And so we help every founder set up dashboards, analyze data constantly, and really make sure that you're not falling into the risk of sort of not focusing, for example, on customer retention and what the data is telling you, and keep iterating. Because we obviously invest at pre-seed. So it's really important to get those early proof points and early signs that you're actually in the right track to product market fit.
Awesome. So I'll go with the same one to Ganesh. And in your case, when I look up Quona Capital, what stands out for me is market development. I know we have had a conversation around this a few weeks back on another panel, but if I can elaborate a little bit on the market development side of things for the audience.
Sure. Thanks, Ajay. It's going to be a little bit of a repeat for you. Yeah, Quona, as a fund, we are as I mentioned, we're focused on emerging markets and fintech for and backing entrepreneurs who innovate solutions for the masses and underserved. Sort of goes hand in hand with the with the markets we operate in, whether it's in India, Indonesia, Philippines, South Africa, Nigeria, Brazil, Mexico, etc. So in several cases, even though conceptually certain ideas have been around in these markets for a while, I guess you need a combination of factors to come together, whether from a macro market ecosystem, availability of talent, sometimes soft infrastructure or digital infrastructure, so on and so forth, for certain ideas to really evolve into real solutions for these markets. And a lot of Quona's efforts and resources and capital actually back such concepts. So in helping sort of establish early proof points and hopefully as an extension help build market leaders around certain concepts in these markets. So I can give a couple of examples to kind of drive that point home. And we can pick any of the companies in our portfolio. Let's say Fisdom in India is a company that is focused very much on helping deliver savings, investments, and protection solutions to the masses and underserved. And most of Fisdom's customers are actually in, I would say, even tier 2 minus or tier 3 and tier 4 locations in the country. And it's actually trying to help people become a lot more self-sufficient and responsible from a holistic financial planning perspective across all these 3 dimensions. Now, the products which exist typically in the market and the level of education that's needed to be able to actually adopt these products are just not, it's just not something that customers in these markets are either understand or are used to. So in that sense, Fisdom is actually working with some of the banks that really tap into these customers to be able to educate those customers through these banks and to be able to partner with them and deliver the solutions. And all of this actually has a technology backbone, behind it to build the infrastructure to seamlessly work with tech. Because if we have to really do this in a physical way, the way it's been done for ages, it'll be very hard to deliver and to actually be able to build a successful business model. So that's one example. Again, I can give another example of a company called Ula in Indonesia, which is essentially digitizing the entire supply chain from brands to retailers. And in that sense, essentially delivering a whole set of products which probably weren't available to customers in the masses and underserved segments because now they're streamlining the supply chain. So in the interest of time, I'll stop there. But that's kind of how we look at market developing solutions.
Great. Thanks for that perspective, Ganesh, and also touching upon a couple of examples from within your portfolio to kind of set the context. Melissa, when I look up EMVC, what stands out for me is fintech for the masses. So if you can, obviously it makes it very clear what you look at, but if you can elaborate a bit more on the thesis behind the masses side of things.
Sure. So we are partnered with lots of sort of Silicon Valley or New York type fintech investors or strategics who are sitting quite far removed from the Indian market looking at it. And it's very easy for them to see the companies that are hottest online, have the most TechCrunch hits. And often those are a new neobank or a new highly branded app for the sort of top 5% of the market. India is as diverse as 20 countries in terms of the segmentation of the market, just like as global investors or in Singapore look at Africa. And it's, of course, many diverse countries, even within which have segments of different economies. And we're particularly interested in fintech business model and tech innovation that is not serving the very top 2% of the economy, nor is it sort of inclusion efforts, which are extremely important, but need to be sort of maybe not commercially sustainable and need to be subsidized in some way, but rather business models that are truly sustainable over the long term and move the needle forward in terms of innovation for large swaths of the population. And we believe that while India is only, of course, one market globally, there's many things that have been happening in India over the past 5 to 10 years, starting first with the biometric digital ID, but then all of the developments built on top of that, like an interoperable real-time payments network, where there can be learnings for other markets who are trying to scale the convenience, access, and consumer benefits of fintech to the masses. An example of a portfolio company that's doing this very well is Nikki.ai, who for consumers across tier 2 to 4 cities is unlocking new kinds of internet commerce transactions for households across 11 local languages, where the full end-to-end processing is in that local language through voice, in a way that then brings the convenience of fintech from the top 1 to 5% to the rest of the market. There's many such examples, and things are still just getting started.
That's awesome. Maybe next time we have something like this, we should get Nikki.ai to kind of be one of the pitches as well. Going on to the engine room of this conversation, we're talking of fintech, funding, and the future. So we started off with the whole fintech side of things, coming to the funding side of things. Now, building fintechs in emerging markets requires a lot of ongoing capital. And because all three of you come in pretty much a little bit early on, what has your experience been with founders that you back as far as their quest for ongoing rounds of financing goes? Maybe we can again go with the same order, starting with Maelis.
Sure. As I mentioned, we work with companies that are pre-seed and are pre-product market fit. So when they come on board, we are oftentimes the first kind of institutional capital that they've received. And I should specify that we offer grants, especially precisely to fill that gap at the early stage between the moment a founder might be bootstrapping and really working towards iterating their product in market, and the moment that can raise institutional funding from investors. That's really part of our model. So we might be the first ones, and the entrepreneurs typically have struggled for a while to raise. And immediately when they join the program and they receive our grant, we work with them to make sure that they can then raise follow-on funding after the program is done, after the 6 months. So, in that continuum, we might be the first type of capital. We fill sort of what we say the valley of death. And in order to ensure that the follow-on capital does come, we have created a circle of investors. That is a circle of global investors, impact investors, commercial investors that share obviously our vision to use fintech to improve the financial health of underserved populations, and make sure that we do make those connections with those investors. We do one-on-one matching. We help them obviously with investment readiness. I prepare the data rooms, prepare their pitch decks, everything that they need to be polished in order to raise. And the idea is that because also the companies that we sourced for the program, we do so in partnership with investors like Quona. there's an intimacy that is created with those investors early on. So you follow the progress of the entrepreneur, and then it's more likely that the investors will actually back the company. And we have actually a very successful story with Ganesh of SokoWatch, a company in East Africa, B2B e-commerce player there that focuses on small retailers. When they came on board, basically their seed round had fallen through, and we were able to give them this capital to really continue to develop the product. And a year and a half later, Quona, who was the sponsoring investors, led their Series A with $14 million. And that's exactly, or Ganesh, you correct me on the amount, but that's exactly the type of success stories we want to see across our portfolio for our founders, and focus from day one in supporting them.
Great. So it's not just the money or the grant or the early seed capital that you come in with, but it's more of a broader ecosystem play where you're kind of enabling the founder growth and helping the company kind of go to next level rather than just infusing the early capital. That's interesting. Ganesh, you already have a reference, something to pick on in terms of SokoWatch and the story that Maelis has. But what's your take on this?
Sure. Thanks, Ajay. And I just made a mental note. That we should probably leverage Maelis more to figure out how to market ourselves better. But that aside, I think the question you're asking is actually a very fundamental one, and the answer can be very long, because we are having this debate in multiple companies. And in several cases, we have actually almost started having a philosophical debate with founders saying companies can be built in so many different ways. Actually, in the same space, similar kind of companies, and all things being equal and without noise and FOMO, market, I think founders will be very sensible. The problem today is there are lots of smart folks who want to be entrepreneurs, and there is a lot of too much capital in the world that's going around. And that's creating a very unhealthy crowding out of too many spaces, even before there is any level of semblance of stability or unit economics or even product market fit, right? And that's leading even smart founders to say, okay, I can probably build a company in $20 million. I mean, I'll give you an example. We just had IPO of a portfolio company last year called IndiaMart. It's the most successful digital IPO in India in the last 15 years. And the largest B2B commerce company in the world after 1688 in terms of number of SMEs and tradings and all. Now, take a wild guess how much private capital they raised before they went public. And today it's a $2.5 billion company. All of $30 million. All of $30 million. Okay, we led Series B. And so, companies can be built in so many different ways. The challenge is the smart founders today are saying, my valuation doesn't keep going up if I don't raise capital. And two, if I don't raise capital, someone else will. And then I'll have to fight much harder to keep up with guys who might actually spend that in indiscriminate ways. And I frankly don't know the answer to solve this, because companies, like, for example, one of our advisors is Kenneth Lin of Credit Karma. For those who know Credit Karma, which Intuit bought for $7 billion. So Ken did a session for all our entrepreneurs saying, I don't think any company, any startup in fintech in the world needs more than $100 million. And we have 4 companies in our portfolio that have raised about 400 million, by the way, just so that you guys know. So it's hard. The problem is people, smart entrepreneurs saying, I don't want the other guy or girl to take the lead in this. And I think it's creating an unhealthy ecosystem. So it's a hard balance, Ajay. It depends from company to company. We have these discussions all the time. But frankly, I haven't found an answer. And I think the last point I'll make is trying to look at venture like a scalable public markets investing strategy or something like that is putting venture at the risk of becoming a very, very frothy asset class.
So I'll take the same one to Melissa. You have been trying to kind of bridge North America and India for a very long time, and as a fund to take that conscious decision to kind of set up shop in India, focusing on and taking a bet on early stage Indian fintechs or ventures that are building for the masses, coming in early or as early as you do. What has your experience been so far with EMVC and over the years that you have kind of looked at the Indian market?
Yeah, I think Ganesh really said it very well. I would concur with what he said, and also concur with the fact that there isn't an obvious solution or clear, outcome. I think that particularly in the Indian market, we're sort of in this almost transition mode where it's basically has the hype, if not more so, of Silicon Valley, but a lot of the startups and the opportunities at hand are much earlier stage. I would say for founders that are listening, you have to get your storytelling right. It's now without question, fintech is too hot, too crowded, even at your earliest angel round, to make sure that you can clearly communicate what you're doing, why it's differentiated, how you're going to make money, why it serves your end customers, etc. That sounds so basic, but I say at least 50% of the companies we meet don't have that sorted. And then sort of this, there is an inherent catch-22 we see with our early stage companies, as Ganesh pointed out, where some of them, arguably could or should be heads down building, but they have to start doing the hype cycle and marketing earlier in terms of being in a very hot market. We see that that it is very challenging for companies, and that storytelling, the weight of how they convey what they're doing relative to their peers and relative to the ecosystem, has greater importance today. And in terms of me having looked at sort of these kinds of deals in India for a long time, I'd say this has changed a lot in the past 5 years. There were less companies kind of building in the same sub-verticals within fintech 5 to 10 years ago. They also, therefore there was less attention on them, but they didn't have to compete so loudly to get their story told. And we'll see what happens in another 5 years. Things may kind of get to a nice stasis point where there's a little bit less noise, signal to noise ratio.
Thank you. Yeah, absolutely agree with you. I mean, on the storytelling and story selling side of things, I mean, a lot of them, they need to get the messaging and the communication right, and not just for the investor to kind of tap into the money, but also probably for different stakeholders. I guess audience has also become smart enough. So yeah, the narrative needs to be right. So I mean, if it wasn't for the current pandemic, if it wasn't for COVID, I'm sure that we would all be in Singapore running this session. There would be probably day 4, maybe 50, 100, I don't know, number of people, but thanks to doing it virtually, I'm sure that this is reaching out to several more people. And we couldn't, or we cannot miss out on the topic of COVID in this conversation and the impact it has had on funding. So I had a similar chat with Pat, who's from the Monetary Authority of Singapore, and he gave a perspective of how fintechs and the financial service industry at large is actually going to help economies kind of get back on its feet and kind of get back on course. So obviously it's very crucial to the road to recovery. But also on the other hand, a few months back we had done a study of impact of COVID on fintech startups, and this was very much limited to India and 2 large hubs, Bombay and Bangalore. We had about 90 odd fintechs participate, and almost 67% of the respondents, and mind you, these were companies that had been around for a minimum of a couple of years, and the runway that they had on an average was 6 months. And given that funding has kind of shriveled over the last few months or a couple of quarters, what has been your view, and looking at companies that are in your portfolio and what you've been looking around, the impact that COVID has had on fintech startups in the first place, and the funding scenario, whether ongoing rounds of funding or the first time companies are looking to raise money? So Maelis, we can just start with you again.
Same. Sure. Well, actually, so for our portfolio, it's not been an even story across all of the companies. And I think at the beginning, certainly everybody was a little bit in a panic mode. You had entrepreneurs worrying, obviously, about their rounds if they were in the middle of fundraising, or their operations, for example, if they were relying a lot of online and offline touchpoints and physical infrastructure, more so than just a pure digital solutions. And for those, clearly the challenges were bigger than those that had a pure end-to-end solution. At the beginning, we saw that because customer spending was going down, and we've done actually a large set of surveys through BFA with customers of our fintech startups to understand what the situations was with their incomes. And here again, we're talking about underserved low-income population, right? So we saw incomes went down by 80%. savings were only lasting 3 to 4 weeks, like in sort of the peak of the pandemic, or March, April, and May. And most people obviously didn't have access to liquidity resources or credit, even less so as the income were going down or were insured. And so that led obviously to companies having to think about how to extend their runways, how to make sure that we're in cash conservation mode, we're more efficient in their operations and trying to cut spend. But then as things sort of progress, we've also seen increase in transactions, growth, like some of our companies have experienced some of the highest growth during this time, and big rounds. So our company, Chipper Cash, raised 30 million, Tobacco raised over 2 million in Series A, Smile Identity also closed around, and you had also obviously large market acquisitions like Paystack. So I think that now we're sort of feeling actually positive of where it's going. If you look at the trends, there's deals are happening, but I'd love to hear obviously what Ganesh and Melissa also have to say about that from for later stage investors perspective.
Thank you. Ganesh?
Sure. Yeah, I think a lot of similarities between what we have experiencing and what Maelis talked about. We did react fast and react quite aggressively across portfolio companies. In several cases, these are founders who had seen a deep crisis in the past. In some cases, this was the first time, and it was harder work there. But I think looking back now, 9 months or so down the line, actually, a lot of companies have frankly become leaner and come out feeling better about themselves, even though we're still not out of the woods. And clearly, companies are figuring out how demand is shaping back up and growth is shaping back up. I think from an efficiency and internal perspective, it certainly helped a bunch of companies. In certain cases, we are also seeing some, I would say, a significant subset of our portfolio companies which have benefited from these times, and some companies are actually going out and they have done acquisitions. We have probably about half a dozen portfolio companies which have concluded acquisitions also, and maybe another half a dozen which are working on acquisitions as we speak, because the playing field has cleared up a little bit. The challenges are on different dimensions, especially if you take something like lending, the liquidity challenges for smaller, medium-sized players. So in some ways, the noise is somewhat clearing up, which helps as well. But the broader point I'll make is it's hard to generalize, because if you take lending, for example, there are so many so many fears about lending in these times. In several of our portfolio companies, we have been, I wouldn't say pleasantly surprised, because it goes back to the acquisition, the sourcing funnel, acquisition, underwriting, credit risk, collection mechanisms of these companies. And we have generally been more conservative than folks who probably looked at lending as another high growth area, a high growth sector like e-commerce. I mean, they actually happen to be very different, as all of us on this panel know. So I think some of what happens in these times is some of these things actually help the better companies. And no one wishes such bad times. But if you are a lucky entrepreneur, you'll have to face at least one or two such situations in the life cycle of your company. Usually, people are not so lucky. You probably face tougher situations more than once or twice. But when this situation comes, you can differentiate the better companies from the also ran. And the last point I would make is, unfortunately, though, I would say for the top 5-7% companies, they haven't missed a beat in terms of the market demand, valuations, so on and so forth. So that's again a function of the fact that today there is a lot more capital in the world than there was in 2008 or 9. And it's, if anything, some of the better companies are actually valued even more richly, because people know there's a flight to quality. So it's somewhat paradoxical and a challenging later stage market, I would say.
Thank you so much for that perspective, Ganesh. Melissa, to round off this question.
Sure. So in terms of this current, 2020 and the COVID year, we haven't seen a slowdown in funding. In fact, paradoxically, at the earliest stages, we've seen a lot more capital in the market. There's several theories of why. One is that the public markets got more volatile. So a lot of high net worth individuals kind of pulled out their cash and are now more excited about taking bets on startups. Several other reasons that could be the case, as well as the fact that there are many well-capitalized accelerator programs, seed funds, et cetera, in the market. So there really hasn't been a slowdown at the kind of earliest stages. Agree in terms of it's been amazing to see the resilience of entrepreneurs, even despite real challenges, even within teams. And, everybody working from home, sometimes with limited resources, bad broadband, et cetera, and just hustling through. It's been great to see. In terms of specifics for our portfolio and the ecosystem that we're seeing, a couple examples. On the consumer side, we have seen that startups are able to gather even better data. To Maelis's earlier point on the importance of data, even at the very earliest stages. It seems that understanding the customer has gotten stronger earlier because of kind of the inherent shakeout of what's happening with consumers, not just on the credit side, but serving them in any kind of consumer fintech context. And a negative thing that we've seen for our portfolio and broader ecosystem because of COVID is we feel that employers in the emerging markets context are now pulling back kind of this burgeoning idea of spending on things like benefits or employee wellness or kind of group programs. We've seen several examples of where that is something that maybe that was a new trend that was starting, and now it's probably going to be a couple years behind because of how much duress businesses are under.
Great. So to wrap up with our panel and moving on to the next segment, the last question I have is more geared towards the future. So one area, whether in terms of technology application, or the market opportunity and potential, where you expect to see more fintech action in 2021. Let's just reverse the order. We'll go with Melissa first on this one.
Had no warning. I'd say I still think there's lots to do on the insurance side. And so in InsurTech, there's a bunch of startups popping up now and trending, but it's still very early in terms of core product and distribution innovation. So excited to see more there.
Ganesh?
Yeah, I was going to, Melissa picked one of my top three. So I'll give you two instead of one. I think one is various kinds of open banking models across credit or payments or insurance. Of course, Melissa already mentioned. But I think the successful companies will look very different from what people are thinking today. The concepts being worked upon today are fairly rudimentary, but we are going to see a fair bit of evolution, I think, in the next 12 months. The second is verticalized finance, where financial services or fintech or financial inclusion within a context, whether it's commerce and finance, retail tech and finance, where we're doing a lot of things, education and finance, agri and finance, so on and so forth. So I think we are going to see financial services within certain contexts accelerate a lot more. And I think we believe that's a lot more sustainable than transactional financial services only.
Great.
Yeah, I'm piggybacking on that. For us, one of the themes we're very excited about is the concept of embedded fintech, whether it's savings as a service or insurance as a service, and really in platforms that we call platforms for financial health. So really like ensconcing the needs of the consumer or the small business and offering several things that are needed for specific use cases, integrating across other sectors. So we are looking at the connections between fintech and health, fintech and digital commerce or in the e-commerce space, obviously all with the focus on whether the products are appropriate and affordable for that consumer or small business. But it's certainly a trend that we've seen with companies, as I mentioned earlier, like SocoWatch or Karma Life is another that we have in India, actually, that focuses on liquidity and in the future, other services like insurance for gig workers. And our next cohort is likely to have a lot of these types of businesses, for 2021.
Great. Thanks, all three of you for this one. I think I need to acknowledge that Melissa and Maelis both are not in the Indian time zone or Singapore. They're both, I think, East Coast America. So thank you for waking up so early and for being on this panel. And of course, thank you, Ganesh, for for being on this panel as well. With that, we would move on to the next segment, which is going to purely focus on the future side of things, wherein we are going to have 5 really interesting startup pitches. So let's begin with Aditya from BankBuddy. Aditya, over to you. Aditya,
Hi,
you're
good
live.
afternoon. Hi. Good afternoon from Dubai. Good morning, good evening, everyone. My name is Aditya. I am the CEO and co-founder of BankBuddy.ai. We're an artificial intelligence platform for financial institutions, specifically focused on the customer experience. And what we bring to the table is pre-built models and pre-built customer journeys to help financial institutions enhance their revenue. So going with the theme, in fact, future came early for us because of COVID. So what we were started out with was pre-built models and something which was futuristic, which we expected to take off in a couple of years. But BankBuddy took off really well during this time. In the last 6 months, we've doubled ourselves. And BankBuddy is a technology platform which we use to help financial institutions create humanized experience and increase their cross-sell, upsell, conversion, and bring in proactive service. So all of us know about the commoditization and the big tech and fintech threatening the existence of existing financial services industry. But in terms of the investment and where the industry is fighting back is about artificial intelligence bringing in from in various aspects. And 73% of these investments are going into customer experience. And that's where we focus on. So what we offer is a cognitive banking framework as an enterprise SaaS white labeled offer, which works on a subscription model or a revenue share model across emerging markets. We are headquartered in Dubai with a development center in India and the customers across 15 countries within Middle East, Africa, and Asia Pacific to help financial institutions offer personalized services, engaging the customers digitally and doing end-to-end processing from information to transactions and advisory across channels and embedding these services, like one of the panelists mentioned, across the ecosystem, across channels, across languages, and across customer segments. So in this journey, we have included we have made one single platform which includes multiple realms of AI like NLP, computer vision, recommendations, all embedded into the customer journeys. And how we bring in hyper-personalization. So we basically spread ourselves across all the interaction touch points, whether our own or third-party or existing channels, to understand what the customer wants, and then build a persona which is a dynamic persona based on the customer segment, prospects, behavioral patterns, demographic patterns, leveraging a whole lot of data available with the financial institutions, and then understanding the strategy or applying the strategy of the organization to give individual personalized treatment in that context with streaming recommendations going in for, let's say, retention, cross-sell, or upsell. So all these happening in real time across channels, across customer journeys for retail banking, corporate banking, and insurance. And we work across channels, whether it is WhatsApp banking or voice banking or social media banking. Across languages, we support 11 languages today, including things like Chichawa in Malawi or Vietnamese, Arabic. So we break that barrier of access across channels, across languages. And we work across customer journeys, whether the customer is coming to seek information or they're looking at transactions with proactive service, or they're looking at doing transactions in the fastest possible manner across these platforms. So COVID has accelerated things like WhatsApp banking for us, voice banking, and specifically in emerging geographies like Asia and Africa, where there has been a leapfrogging in terms of moving from the older generation channels straight away to the newer generation channels. So this is what I was saying, the future has come early for us. So the platform has complete enterprise-grade middleware, reporting, governance, compliance, and we've been approved by central banks in majority of the countries where we're working in, and in the process in some of the countries for its governance, compliance, data security, specifically when we're bringing in AI models, which are relying on a lot of data and a lot of personalization, personal information. We've been part of many accelerators, starting from US to Netherlands and Vietnam, etc. And we were the startup of the year last year in UAE and this year as well in UAE. And we've been ranked among the top 50 companies in the AI space and top 50 global fintechs across the globe. And there are a few of our customer stories. We're live with a couple of large banks, and these are things which we have implemented in a matter of 3 months, 4 months. Closer home in Credit in Vietnam, IM Bank, etc. Thank you.
We can go to the next presenter, Subbu Rao from Discover Dollar.
Hi, I'm Subbu, founder of Discover Dollar. Discover Dollar, the vision for Discover Dollar is to help enterprises identify overpayments and leakages by harnessing AI and machine learning. As I upload the file, just give me a couple of seconds. It should be loading here. So what basically we focus on is to help large enterprises look into their existing data sets and create value. When I'm saying value, it's really impacting their bottom line or cash flows, right? And speaking specifically about the Fortune 500 companies, the kind of big claim we do is we say them that we deliver $1 million real impact in 12 weeks, and we are paid only when we deliver that. It's too good to be true, but that's something which we have done time and again. This is some of the track record what we have already got. We have analyzed more than $1 trillion in spend, 40 million plus contracts and negotiations. When I'm saying negotiations, it includes emails and chats and informations before a contract gets formed between the procurement team and the suppliers. We have recovered $300 million of money which otherwise would be lost forever. It's not a hypothetical number, which has come back to a customer's bank account as actual money back. And we have at least deliver 4x ROI to most of our customers, if not more. Some of our Fortune 500 companies are below listed. We work with some of the best run companies in the world and still able to deliver value to them. AB InBev, the world's largest brewer, Lowe's, the second largest home improvement company in the US, Target, the second largest discount store in the US, etc. Speaking about some of the case studies, going deeper into that, right? So Target happened to be one of our first success stories. This is a testimony of a director of Target Innovation speaking about us in a CFO summit, where we have been helping them delivering like more than $100 million of lost revenue to come back, looking into their millions of transactional data. This is another success story with AB InBev, where we have been working with them through the pandemic. We have helped them bring back $20 million opportunity, which they have lost in 3 zones, 3 continents. And this happened to be one of the highlights for AB InBev through the journey of pandemic as a part of the cash flow plan and being a highlight. This is another success story in Canada, where the largest automotive retailer could bring back multiple $1 million in 12 weeks with the help of Discover Dollar. And this is one of our advisor, ex-CFO of Google, Patrick Pichette, now the chairman of Twitter, speaking about this problem, because he has seen this problem across holding financial leadership position in multiple companies, saying this is a problem across even efficiently run companies as well. So what's the problem we solve, right? So if we see the procurement landscape of large enterprise companies, only 25% of the data is sitting as structured data. Most data of negotiations is sitting in unstructured data in the form of emails, contracts, negotiations, where a lot of financial discussion happens on what price to pay and what discounts to collect, which not always goes to the finance teams who are sitting across the globe or doing it as a shared service function. So what happens is they may end up losing at least $3 million for every $1 billion business. Like 99% of times they do things right, even then 1% loss can mean a lot of money for a multi-billion-dollar companies. And they may lose money in different forms like pricing error, miscalculated rebates, missed deal opportunities, etc. And how do we solve that at Discover Dollar is we have developed a proprietary NLP-based technology, harnessing AI, where we extract relevant information from negotiation data like emails, to see, hey, who is the supplier who you're negotiating with, what's the product under discussion, and what's the cost you're supposed to pay from which date, and get that into
Time up for you,
instructions.
Prabhat. I mean,
Yeah.
time up for you, Subbu. Yeah.
Yeah, so that's how we find value and discover value for our customers. So discover your next $1 million. Reach out us on help@discoverdollar.com. Thank you.
Thanks, Subbu. Next, we have with us Prabhat Sahu from SAWOLabs.
Yeah. So hey everyone, good afternoon if you're from this side of the world, and from wherever you are, good afternoon, good evening. Essentially, I have been hearing Ganesh and Melissa, even Maelis talk about how inclusion is important and how the ability to transact and the ability to transfer money and all of those kind of transactions aren't for the top 5% of the crowd, and it's for everybody, and the inclusion needs to seep down. What we essentially have built here is the ability to transact for everyone without being in a certain jurisdiction of telecom networks and in a certain method, availability of OTPs and a certain level of education required to run password-based transactions and all of these. So what we have built is an OTP-less, passwordless solution for India and other developing countries. What we do essentially is replace the need of transacting using OTPs every time with public key cryptography infrastructure, and ensure that once the device is marked, the OTPs aren't required for any further transactions. And also when applications try to take consumers on board, they need not use passwords and other authentication methodologies. So replacing all of that with a cryptography-based model, which is not in the form of an app, but in the form of an SDK that any web or mobile platform can integrate with themselves. Six lines of code that can be copy-pasted into your code, and within 3 minutes, you are available for every level of the population around the world. So we also reduce the overall cost of authentication out there. So essentially, if you're spending X amount of authentication right now to onboard consumers with a very varied and fluctuating success rate, we increase your success rate to 99.86%. That's our average. And and obviously build in convenience, because now OTPs and passwords are not required. And while we do all of this, we are able to reduce the overall cost of authentication to 1/4 of what it is. I'll quickly run you through the product flow and how this whole tech that we have built works. Let's assume there are 4 applications, A, B, C, D, which have integrated SAWO on the back end. What essentially happens is we are able to convert the whole application into passwordless and OTP-less scenario within 3 minutes. And eventually, let's assume Ajay downloads the application A, and this is when he is going on board for the first time on any SAWO-based application, as in the first application on the SAWO network. He enters his email ID, his phone number, receives a code to validate the same. That's an OTP. He enters that, and this is when his 2 data points, email ID and phone number, are verified. SAWO generates two keys on the backend. That would be a public key and a private key. The private key drops on the device, marks the device, and eventually ensures that the email ID and phone number are stored in an encrypted format on the key storage of the device. And this is when Ajay decides to move from A to application B. And this is when he doesn't have to authenticate at all. He just has to press a register, and the local screen lock gets triggered. Local screen lock, which would be Face ID, fingerprint, PIN, pattern, whatever, depending upon the capability of the device, right? And the email ID and phone number are auto-filled here, and Ajay opens the screen lock, ultimately giving consent to the private key and the public key to interact with each other. The device is validated, the user is validated, and this is when the data is directly shot from the private key of the user's device to the database of application B. So how this is different from passwords, social logins, or OTPs is that we don't store any data. we ensure that data is stored on the consumer's device. That essentially means we are providing data autonomy as a commodity. We are ensuring that.
Time up, Prabhat.
Ajay,
Your time up for you. I said time up for you.
Yeah, cool. So essentially ensuring that data is controlled by the end user and is transferred to the client itself. And obviously, while we build in convenience and security, we are also able to reduce overall cost to one for the Vertis. Thank you so much, Ajay, for the time. Over to you.
Thank you. We move on to the next presenter, Andrew Mutua from PesaKit.
Greetings from Nairobi, Kenya. My name is Andrew Mutua. I'm the founder and CEO of PesaKit. PesaKit is a fintech startup based in Kenya that is improving last mile access to financial services and digital commerce through mobile money agents. Mobile money agents represent the face of mobile money services around the world. And in 2018 alone, about 136 billion was deposited at mobile money agent points. So mainly these are low-income earners going to digitize cash at agent points. So to give you some context, for a country like Kenya, for every 100,000 adults that we have about 11 ATMs and 6 bank branches, but about 540 mobile money agents who are there to serve customers when they need to top up their mobile money accounts or when they need to withdraw or just transact digitally. So for PesaKit, we work to empower these mobile money agents, solve their liquidity challenges, and help them generate more revenue for themselves and build business resilience. So we offer our services in 4 ways. So we offer agents cash flow analytics. So these are analytics that enable them to know how much cash or float they need to serve customers so that they do not turn away customers who come there to deposit. We also offer them digital on-demand secured loans. So these are quick loans for their liquidity that they can ask during the day. If, let's say, I want to go and withdraw, but the agent doesn't have any float in the account to allow the withdrawal, just go to PesaKit and request a quick loan that they can use to service me, earn a commission on that, and pay the loan later. Then we offer agents what we call PesaKit Commerce. So this is a service that essentially allows agents to become resellers of other digital goods. So at the moment, we have items like airtime, electricity services, bill pay services, and e-commerce services. Then we have PesaKit Insurance, which enables an agent to either buy insurance or sell insurance to the communities they serve. So buy insurance for them, it's micro-insurance to protect their business. So we have covers that range from a $40 USD cover that covers their inventory, covers the cash they have, covers the assets they have in the business, to more micro-health insurance covers that cost people around $70 that cover them for outpatient hospital or inpatient covers. And these are also insurance covers that they can resell to their customers. So for the current partners we've integrated with or who have integrated with our platform, we have all the telcos here in Kenya. We have some telcos in Tanzania. We have lenders who lend on our platform, and we have insurance providers. All their logos are there. For PesaKit, we've been recognized for what we do. So how we harness the power of AI, mobile technology, and agent networks to create a financially inclusive world. So about 2 months ago, we were recognized by the Inclusive Fintech 50, and we received a Financial Resiliency Award and been inducted to top 50 best companies, fintech companies in the world who are driving inclusivity through technology. Then this year, we also joined the Catalyst Fund, and you heard what Maelis was talking about in terms of how they helped us become a data-driven, digital-first business and very consumer-centric. So we were part of the Catalyst Fund for 6 months, and that really helped us to grow our business since we're quite early stage. Then we've won some awards for our AI, so the kind of technology we use to give these insights through the DFS lab. Our technology has been recognized by Mastercard Foundation and Fiber as one of the superpowers of AI here in Africa. And GSMA also recognized us as potentially one of the few future distribution models for financial services.
Andrew,
Okay, cool. Thank you. Our vision is to become a super platform providing inclusive, interoperable, last-mile digital commerce and financial services. Check out our website and get in touch. Thank you.
Thank you. And to round off the last one in terms of pitching, we have Aditya Prasad, Adi from Perfios.
Hi, thank you so much, Ajay. I'm Adi from Perfios, and I represent Perfios Software Solutions. We do a lot of real-time analysis and decisioning and help banks and financial institutions globally to analyze and ensure that the credit underwriting is cut short with least of the manual effort involved. We analyze financial documents. It could be banks, credit bureau statements, and various other things. Hold on, let me upload this. So while it gets uploaded, we cut short on a lot of credit underwriting manual effort in terms of how it is analyzed, the reporting that is carried forward in a banking environment, mostly in the lending segment, the collection of documents, which is mostly manual or paperwork. We ensure that it is converted straight from sourcing data directly from a PDF document or a scan copy, and then ensuring that the data is analyzed, churned. For some reason, it's not uploading. Data is analyzed and churned, and then that's what we do. I think the file is not getting uploaded. Let me talk through this. We have been doing this for a while now. It's been 11 years plus for us in doing this. We work with a lot of top banks in India, and we started going international in the last 3 years now. It's been working with almost 400 plus customers. We analyze documents in various formats. It could be a scan document, it's a PDF document. We even fetch documents from online accounts and analyze and churn and give it back to credit underwriters to ensure that they do the credit underwriting activity on a priority basis. And we recently launched in Kenya. We recently launched even in Singapore, and we have been working around for almost 11 countries right now. The best part is that we have recently also acquired a LMS platform, and today we provide a solution where it gets an integrated platform where it has all the integrations in terms of fetching data from banking accounts, fetching data from bureau, financial statements, GST data, and stuff like that. And we also do reconciliation of all these documents. We are operational from India, headquartered in Bangalore. We have offices in Kuala Lumpur as well. And yeah, that's what we do. Thank you so much. Ajay, over to you.
Thanks everyone for being amazing panelists and presenters. And thank you Singapore Fintech Festival for giving me this opportunity to moderate this panel on fintech funding and the future. Thanks everyone. Have a good afternoon.